It's Quant Trade Edge with an update for the last couple of days and also a bit of a farewell. We'll get to that at the end of the video. This is a crude oil daily chart, and as you can see, we broke out of the trend line a couple of days ago, and yesterday everything looked ready to fire on all cylinders. And coming out of the pit open, we had a pretty large thrust. Let's see if I can find this. Pit open yesterday. Oh, going back way too far. Oh, that's why. There we go. So this was the pit open, and there were 3 bars of very strong thrust, very strong volume. But what should have caught your eye was this very clean ABC and a very tight ABC. And since this broke below the low of this bar, it counts. It's not a hoagie. Same thing here, same thing here. And then as soon as this broke, there was no heat on the U-turn. We went from 110.23 down to 106.45, so almost $4, three something dollars. And the other thing is, to end on a big down bar like this and not have continuation and divergences is the sign of a liquidation break. So I'm sure, like on a higher time frame, it's one directional bars. Yeah, take into account that hoagie, though. It's probably just even on the 15-minute that it's one thrust. And nothing has broken with the daily structure. Today we recovered that, and it's just an inside day hanging out over here. So nothing has changed with the daily picture. Yesterday, when all of that happened, we didn't take out the previous day low or anything like that. So that's just what happens when the pattern is so obvious on the daily. Everybody gets long. You have that very obvious spike up on the pit open, and FOMO kicks in. Everyone thinks they've missed their chance to get in, and then you get a nice little U-turn to flush them, and then it's just rebuilding again, and nothing has changed with the daily picture. Natural gas has been a fun trader today. We got up very close to the round dollar number, $9 number. We got to 8.996. And if you look at an hourly chart here from, I guess you could really even go all the way back there, but just these 3 peaks here, you've got a peak 1, peak, I guess this one, peak 2, peak 3, where you have higher highs in price, lower highs in momentum. And that was a good sign that there was going to be a sell-off, and there are various ways you could have got into it. The best way would have been just shorting right below the low of that bar. That would have been around 892. If you waited for a 5-minute U-turn, you got this. This is all a hoagie here, so it's not as tight as you would perhaps like. There we go. This becomes your U-turn spot below 871. So you've got 870, based off of the 60-minute chart, you could have gotten short 892. Based off a 5-minute U-turn, you could have gotten short 871 when it broke down here. Either way, you got 70 to 90 cents of gain. And what's a little tricky here is on a daily pattern, this is now an outside bar. And so that means the trend has not really changed yet. It's going to change on Monday if we take out today's low. And also, given that this is the end of 2 waves, that could be the end of it. And also on the daily, we have a very large divergence here. Very large change in momentum. This, up here was 89, very climactic. And then here we're just 74. So this higher high has made a much higher low in momentum, and that could lead to more downside. Down to a 5-minute chart, one thing I noticed is up against this little peak here, we pretty much had a vol compression pattern, contraction pattern, right? This is basically an upside down cup and handle. And another way you could look at it, maybe it's not as pretty because you got a higher high here versus, continuing to get a better cup. But sometimes it's easier to view these things in a bullish way. So if I just say 16 minus natural gas, just to get it to look like a bullish chart, if you saw this, you would think this had cup and handle potential, even though it's not the perfect definition. And that perfect definition is because we're not getting continually higher highs, higher lows. I'm sorry, we got a lower low here. We could try to check the volume. I guess with the minus you can't really do a volume, but we can go back to here and see if downside volume dominates the right side of this. And it kind of does, but not really. So, yeah, I would say bigger picture, we're below yesterday's low. This is probably a support zone in here. If we take out today's low on Monday, then perhaps get out and watch. But this has been an incredibly strong market. There is this divergence, but you have to give it the benefit of the doubt given how strong it's been. So I would err on the side of caution here. But just interesting ways to look at that. And then another thing today that I would call sorry, I had a phone call interrupt me there. But I think what I was trying to say here now is there's something neat on the S&P 500. Today was jobs number, and this is going to be something where we throw together a few different things that we've learned over the videos. Ahead of the jobs number, we were trading at around 41.30, and I was treating that as a pivot point because the jobs number is somewhat of a binary event to the market, and I measured the straddles, and the straddles at the time for futures were about 61 points, which would put us down at about 40.69, something like that on the low end, and 41.30, 41.90, so call it 41.80, something on the high end. And if the jobs number had rammed the price above or below one of these convincingly, that would have been the sign of a trend day. But since that didn't happen, we ended up with more of a range trading day. So knowing that this area was lower boundary, there would be option support, because this wasn't a thrust through there. It took us an hour and a half to get here. So it took a slow drip down to here. We get down to this level, and on the 1 minute, you can see a divergence form between this low and that low. So on that, that was a good spot to go long, and we kind of went from the lower end of the range back to the middle of the range. We didn't quite make it to the upper end of the range, but even that is 60 points. Getting from there back up to where we were pre-jobs. So that's kind of a multi-faceted thing to analyze, right? From doing your homework and being prepared, you understood where the straddle was and where that boundary was, and then watching it in real time, you would catch the divergence. So that was that. And then I just want to say kind of farewell. This has been a wonderful experience for me. I hope you guys have learned something. I'm getting a little tied up with my personal and professional responsibilities now, so I'm not going to be able to post as often. Maybe once in a while I can still get something out. But still, there's a wealth of information in these videos. Please, check through them. I'll still look at your questions and answer them. What I'll probably do is start just posting back on Twitter because, rather than making big, long videos, I'm probably going to take a higher time frame view on things. And for example, one thing I'm really looking at now is GDX, the Gold Miners Index. And, in retrospect, everything's, clear in retrospect, but we had a clear downtrend line here, and we're sort of, oh, I'm sorry, that's GDXJ. On GDX, we are basically, potentially retesting this trend line break down here. And if you looked at it from this high here, it would have been obvious that we were approaching trend line when we had that big outside bar that took us down to here. So I still think longer term this looks good. It's one of the few sectors that can do well, despite the market. It's just that when you have this wholesale liquidation, every sector is going to get whacked, and that's what's happening here. So, if we can go back and reassault this trend line and take it, then I'd be looking for these old highs around 65, and then at that point we can see if we get some sort of compression pattern that forms. And again, this is a weekly chart, so this could take many months to play out. But that's probably the type of things I'm going to focus on a little more going forward, because I'm going to be a little too busy to mess with the day-to-day. So anyway, thanks all of you for being part of this community, and let's still try to grow the community. I think there's a good amount of content there, and I will respond to questions. So, and if you have any other comments or anything that you want, you can email me directly, quanttradeedge@gmail.com. Have a good weekend.